Many people are talking up gold with high expectations in the coming days that it will resume its meteoric rise. And that could happen. However, we are adopting a more cautious mindset. In this video, we will reveal the level I'm looking at as the line in the sand which, if broken, could hurt gold badly, and a deeper market correction would not surprise me. Let me caveat that statement by saying we read price action and market structure and go with the flow and rhythm of the market without preconceived biases. At the end of today's short video, you will have a deeper understanding of the gold structure and price levels, putting you at a huge advantage over others. Everything we cover is current, and you will know. Position of the gold market right now. Higher time frames, trend, and swing direction. Price action and price zones influencing price. Volatility. Scenarios that could play out from today. We start with our simplified market structure. This is a 2-minute, easy-to-digest snapshot that gives us the overall picture. Welcome back. We are Bitcoin Capital Gold. A global financial reset is quietly unfolding, with governments and major institutions positioning for a future where Bitcoin and gold form the foundation of the next monetary system, replacing our broken global fiat system. This channel's only focus is just these two assets, Bitcoin and gold, using structured technical analysis to understand market structure and researching how capital rotates between these two strategic assets. If you want to stay ahead of this far-reaching monetary shift, this channel is designed to help you position yourself to capitalize on future moves. Let's dive into the details now. If you take nothing away from this video, these are 3 numbers you need to watch on the gold right now. They are $5,000 for both resistance and equilibrium point, and $4,000 for the structural low. Trend and swing direction. The yearly trend is up. Yearly started its ascent as far back as 3rd November 2022 at $1,618. The yearly swing direction is up. The last monthly low was on 14th November 2024 at $2,541. The monthly trend remains up. The swing direction is now down. We cannot ignore this March's monthly bearish bar, which has less than a week to finish. It would be premature to say the correction is over. The fact is, the meteoric rise of gold means that an even more dramatic pullback would still leave the uptrend intact. $4,000 is our line in the sand. If it breaks and closes below that level, we could see a healthy correction in a bull market. Earlier, we gave you the immediate levels you should be watching on a lower time frame basis, but here are the higher time frame price levels that you need to know. $4,000 is the critical line in the sand support level. $3,432 would be a healthy correction, and $2,835 would be a deep correction. Gold, in our opinion, still needs to find a support level that could be used as a springboard for a sustained run-up. The weekly chart is showing an outside reversal bar, and it is our view that more buyers need to be flushed out. Fibonacci zones. We have calculated 2 upper Fibonacci zones and 1 lower Fibonacci zone for you to box in this market. The Fibonacci resistance zone 2 sits above the current price action. This sits at between $5,360 to $5,385. As long as price action trades below the equilibrium point of $5,000, gold still remains bearish on the lower time frames. Fibonacci resistance zone 1, $4,856 to $4,862 is its first test. On the downside, the Fibonacci support zone sits at $4,209 to $4,229. Our prior structural low on 2nd February at $4,423 was violated. A new structural low formed 2 days ago on 23rd March 2026 at $4,100. The 23rd March low tested our Fibonacci support zone but did not close below it. In fact, we saw a healthy bounce higher, indicated by the large bottom wick, showing buyers stepping in. But that may not be the end of the story for sellers. We need to build support at whatever level in order to go higher. So far, apart from our own calculated Fibonacci support zones, we have no price action levels showing us any support. Volatility. Volatility gives us internal indications of direction momentum. First, looking at the ranges, we see an expansion over last month of the monthly range from $877 to $1,334, which exceeded January's violent move. Volatility on the ranges is creeping up. Another way to look at volatility is by measuring the close to the open. Looking at the monthly, we have 5 months of higher close to open in October 2025 to February. March is showing us a direct contrast, so far closing $804 lower than its open. The monthly close to open is telling us that the bears have the upper hand. Volatility is creeping up on gold as it defines its next move. With the structure and key levels now defined, the market can realistically unfold in 3 different ways from here. Scenario 1. Buyers respond to the selling. To date, sellers are in control, and they have tested as low as $4,100. We are watching the buyers' response. Our Fibonacci resistance zone 1 is the first test for buyers, just above $4,800, and above that, the equilibrium of $5,000 it would need to overcome. Scenario 2. Range continuation. Gold can make big moves. For now, let's just define range-bound trading between $4,200 and $4,800. If price moves between these levels, we are treading water. Scenario 3. Support failure deepens. It's our view that the new structural low on 23 March $4,306 will get tested again, and the real test is $4,200. To sum up, here's what we're watching. We are operating in a very tight range of just $1,000, from $4,000 to $5,000. We are watching the lower line in the sand at $4,000. A close below this level is critical for gold. If the buyers cannot defend this level and sellers show strength, prices can be pushed down to $3,432 and an even deeper correction at $2,835. Such a move would contradict many gold pundits, but we are reporting what our analysis tells us. Price action is the ultimate truth. We have had a volatile start to the first quarter of 2026, and with this current compression, something has to break. Oil prices are now starting to settle. At the time of this writing, light sweet crude oil has pushed down from $100 a barrel to a current price of $88.50. Eyes are now on risk-on assets like equity and Bitcoin, and risk-off assets of gold and Bitcoin. Although our view is that in an evolving new financial world, this risk-on and risk-off narrative for gold and Bitcoin is evolving to be a more sophisticated discussion, where both gold and Bitcoin can flourish. Every day we publish a market structure simplified briefing on both gold and Bitcoin. Gold and Bitcoin are not competing assets, they are strategic levers responding to different financial conditions. Gold is asserting itself as the defining store of wealth of our era, reaching all-time highs against a backdrop of war, inflation, and institutional demand. Bitcoin is simultaneously rewriting its own narrative, no longer simply a speculative asset, but one that serious portfolio managers are beginning to position alongside gold. Understanding how these two assets interact is no longer optional. This channel is designed to help you think through that decision with structure and discipline. If you found this video useful, consider liking and subscribing so you don't miss tomorrow's video. What do you think of the levels we gave? Do you agree? Do you have your own levels you're watching? We'd love you to share your thoughts. Comment below so we can all discuss. At the heart of the new global financial economy will be Bitcoin and gold. If you want to be ahead of the curve, follow this channel.